Hey traders, Akil Stokes here with Tier1Trading.com and welcome back to another Weekend Trading Edge video. If you guys are new, this is a video I do each and every week giving you a look at the top trading ideas that are on my radar for the week to come. But first, got to remind you that starting on August 1st, we are hosting a 2-week free online trading workshop. This is your chance to work with a handful of professional traders for 2 weeks completely free as we do a handful of live and pre-recorded training events to kind of answer any questions you have about what it takes to be a consistently profitable trader and show you what it takes. You can sign up at www.tier1trading.com. There's a link in the description box and you can read up on all the details there, but do not procrastinate. You want to show up for this. We don't host it too often, so don't miss out. Let's put it like that. So not a bad week in the market. I continued to get spanked by dollar yen, which has been the theme of kind of the last month or so. But aside from that, right, euro yen did well of hitting projections. Dollar Swiss did well of hitting projections. And our Comcast idea from last week is up 4% already. So a decent week overall. Almost forgot, I want to keep you guys updated on the news. Big news week this week, right? If you've been following along, you kind of noticed already. But we have our rate hike this week here in the U.S., our FOMC statement and press conference as well. And this is going to be an interesting one because the FOMC members have gone quiet for the last week or so. It's just kind of what they do around this time. But we're coming off Canada giving us a greater than expected rate hike. We're coming off the ECB giving us a greater than expected rate hike. The market initially wanted a full 1% rate hike, and then we got some news and some FOMC members saying 1% is a little bit too high. We're probably going to stick with the 75. So it is an interesting kind of event. I don't think there's kind of an agreement on what's going to happen. I think it's going to be 75 or it could be a full point. We'll have to see. So that just adds for kind of more rocky waters heading into Wednesday. So just be aware of that as you go into the market this week. All right, now let's hop into the charts. Today, we're going to get started with Bitcoin and really do some follow-up analysis from an idea that we had in our live stream from Thursday. Now, I'm not a Bitcoin person, but I get asked a lot, Akil, can you look at Bitcoin in these videos? Most of the time I say no because Bitcoin really hasn't been too exciting lately, but we have had something that has been pretty interesting over the last few weeks or so, and it's time to analyze and see what's next. So you can see that Bitcoin has been on a bearish rally, and we just completed at a 127 Fibonacci extension point, right? You can see if I bring my Fibonacci extension tool from my swing high up here from November 21 down to my swing low down here from January 22, we're going to stop right around that 127 level. You can actually do the same thing from this recent swing high to swing low, and we'll get an overlap on those 127s as well. So we came down to that level, RSI went oversold, and we started to consolidate, right? You can see the moves like this, these are going to be trending moves, directional moves where the market is putting in a nice little slope. When we're going sideways, more left to right action, that is going to be called consolidation. You can see that we found a little base. We came down to a low, we retraced, we came down and did not violate that low. We came up, did not violate the high. We came back down, did not violate the low again, right? This is going to be a sideways channel. And then finally, we broke and closed above the highs of this channel. Now, we have a process here at Tier 1 Trading, and we'll tell you all about this during the workshop, but it's called IPDE. It is an amazing process. It's pretty simple, but what it does is just get you on track. It gets you robotic. It allows you to become systematic in your approach, which allows you to avoid a lot of those trading mistakes. By the way, speaking of trading mistakes, a really good post by my friend Orsi here the other day that said, making mistakes is normal. After all, we are all human beings. It will happen at some point in our trading. If you log your mistakes and learn from them by trying to avoid repeating them time and time again, then it will have a huge improvement in your results long term. And one of the name of the game basically in trading is avoid mistakes. And many of you guys know my story. I'll give you kind of a brief wrap up or summary of my turnaround. I turned my trading around when I eliminated mistakes, right? I was not doing very good at trading. I blamed everyone but myself. I looked back and did a full review, an audit basically of my trading year. And I basically did an A/B split test where I said, what would my results be if I just took the trades I was supposed to take and took them the way that I was supposed to take? and what were my current results. And I saw that by just eliminating mistakes, I went from someone that was unprofitable to very profitable. And from that moment on, I made the goal to kind of eliminate mistakes, and not all at once, but one less each month until I eliminated the majority of them. I still make them time to time, but just by doing that, I turned myself from a non-profitable into a profitable trader. So eliminating those mistakes are key. Having a process that allows you to avoid them helps massively in doing that. So that 4-step process, IPD, is identify, predict, decide, execute. We can identify that price action was in a sideways channel. We can identify that we've broken out to the highs of those channel. Next step is that allows us to make a prediction that price is likely to go higher, and then we want to decide if price is likely to go higher, where are we likely to go to. Well, there's an interesting level here, and it's kind of stinky, but that's a technical term, right? Stinky. This little wick down here. This would be the previous new structure low, which would be the first point on my radar in which I would expect price to go to if we're going to continue higher. However, if we look left and give a little bit perspective, or get a little bit more perspective here in Bitcoin, you can see that there's a more natural shelf right here, right? And what I mean by shelf is like a swing point, an area of support and resistance. So if we just take a look at what price has done here, and I'll get out the highlighter tool for you, right? We can see that price rallied up, and then we, boom, came here, we found the floor, we did all this jazz, and we found another floor, This is called a period or an area of support. We came up, did all this thing again, and then right here, we found that same floor. So this level right here is a much more natural support and resistance level than this little wick below. So you can actually make your projection a little bit higher. I didn't look at this earlier, but we may have some Fibonacci love up there as well. We can bring in some more tools to give us some confluence. Fibonacci retracement, swing high to swing low, looking for a 382 retracement. Yeah, right on that level. Let's do one up here as well, maybe an 886. Fibonacci retracement, swing high to swing low. Right there, even better, a 786, right? So 786, 382 Fibonacci confluence. And lastly, if you want to bring some volume here, we'll just do it from this we'll do it from this high right here. Let's see if we get a volume spike in that area too. Yep, you can see a nice volume spike right in that area. So pretty decent area to look for Bitcoin to go to. You got a nice even handled number in 30K here as well if you want to aim a little bit higher. So we've made our projection. Now the question is, how can we get involved? Well, many ways to get involved. Let's go down to a lower time frame. One, there's many of, there could be a handful of price action patterns that you look for here. One that stands out for me right now is we're going to have a potential advanced pattern formation, right? So if we take a look at this move, right? This move from, this swing low to swing high, and then this retracement right here, and then this failed extension right here, and then this current retracement right here. This is consolidation to many of you, right? The market's not really putting in any type of solid move. This can also be a complex pullback, which is a kind of a minor form of consolidation. But when the market makes these moves and when it hits a specific Fibonacci ratio and it does it in a specific order, it sets up for something called a ratio pattern, harmonic pattern. We call them advanced patterns. Whatever you want to call it, doesn't matter as long as you know what they are. But it sets up for these pretty powerful pattern formations. And in this specific pattern formation, what we would expect is a move to the upside. This is going to be called a bullish Gartley pattern. The completion zone for this Gartley pattern is going to be from my 127 extension right here, all the way to the low of what's called my X leg, right? And we're looking for a buying opportunity here. So this buying opportunity aligns with the overall bullish prediction that we have, which means if price action gets down to this level, this Gartley pattern could be used as an entry reason to trade it just as a Gartley or to trade it as a higher time frame continuation trade as well. Next up, the Dow Jones is going to be a similar situation. This is a follow-up from our triangle breakout, if you guys remember. But we've got a breakout above a previous level of structure. Sorry, got the wrong tool there. Let's try it again. We give a breakout above a previous level of structure. And then we've had a tight consolidation around the highs. Now, again, when I see these tight consolidation around the highs, I always expect that price is going to continue and break out to the upside, right? If there's a massive amount of selling pressure, we would have seen that already. And in fact, you can see that the sellers tried to push down and didn't really have a good kind of a success doing that. So a few things we can look for if we want to go all the way down to the hourly. We already have a 3-bar reversal down here, which can be taken advantage of as a buying option. Or as always, you can look for any other type of pullback trade here. Now, bigger picture, we also have another advanced pattern formation forming, right? This one's going to be a bearish pattern. So we're looking for a selling opportunity here. So if we measure out our pattern formation and we take our X to A, which is this initial swing high to swing low, this first retracement is our A to B. This time we do not hit the 618. So instead of being on alert for what's called a Gartley pattern, we're going to be on alert for what's called a bat pattern. And we know from the rules of the bat pattern that our expected completion point and area is going to be from our 886 right up here to our highs of our X leg. So this will be the area that we'd be looking for sells. And you can see conveniently that runs right into our previous structure shelf. Now, how does this affect our trading ideas? Well, a few ways. One, this could be your selling opportunity. Boom, you can only be looking for this, and this will be present on the higher time frame as well. Two, if you do find a buying opportunity down here and you want to ride it up, similar to the Bitcoin trade, now this bat pattern gives you a nice little target area, right? Maybe instead of expecting a move all the way up to 33.5s, you say, hey, we got this bat pattern right here. I don't want to fight that off as well as consolidation. I'm going to be a little bit more conservative and look to get my targets off at 33s. And of course, if you're someone that does both, you can even do some stop and reverse action where you buy it up to the pattern completion point. You immediately sell yourself out of your buy, giving you profit, and then put yourself in a sell for the new trading opportunity. A little advanced, but really cool when you do something like that. I've been there before. It makes you feel like a beast. Don't forget, Bridging the Gap workshop, August 1st to the 12th, 2-week free online trading workshop. You can register at www.tier1trading.com. There'll be a link in the description box below as well. If you are someone who is struggling or aspiring to be a trader, take advantage of these free workshops, right? There's no excuses. 100% free. If you don't attend, it basically is you telling yourself that you don't want to improve, right? We spoke about this in one of our coffee break episodes, but Jason Greystone and myself, even as seasoned vets, we always believe in continued education. So we're still reading books. We're still attending webinars and seminars. We're still talking to peers in our industry because we want to get better. So even if you're someone that feels like you have a grasp on your situation, well, you understand risk reward. There is no risk because it's free. There's all reward because you have the chance to learn something new that can help you improve your trading. All right, I'll see you guys there.